How much dividend income did I receive this October, and how much tax will I have to pay to the claw? He has already emerged from his lair and appears to be tracking me down on his new bike. How did he manage to afford that, I wonder? In this video, I'll show how much I received from both share dividends and also from premium bond prizes. And if you stay to the end, I'll reveal which new company I've bought for the very first time. I started investing way back in 2009, and in the October of that year, I received no dividends at all. The journey can be very slow to begin with, but I just continued, drip feeding any spare money I had left over each month. In the October of 2010, I received £19 from 2 mining companies, and in the following year, those same companies paid out £33. In the October of 2012, I received £63 from Xstrata and GSK. It was so motivating seeing the totals increase like this that I felt I just had to continue to see where it would take me. Let's fast forward to the October of 2025 to see where we are today. This is not investment advice, and I'm simply showing you my own journey. On the 3rd of October, 3 of my exchange-traded funds paid out. The first of which was VHYL. This ETF gives you exposure to over 1,700 companies from around the world which pay higher dividends. These are some of the largest ones you would own. Ongoing charges are 0.29%. The price is up 9.7% so far this year, and the dividend yield is 3.1% spread over 4 payments a year. This screen shows how the dividends per share has changed in recent years. This month, VHYL paid out a total of £70. If you want to know how much I hold in each of the companies or ETFs shown in this video, then I've listed the totals in the video description. Also paying on the 3rd was VEVE. This ETF gives you exposure to over 2,000 large to mid-cap companies from the developed world. Here are the largest ones, and it's weighted on capitalization. So for example, 4.5% would be in Apple. The ongoing charge of this ETF is 0.12%. The share price is up 8.7% this year, and the dividend yield is 1.5% spread over 4 payments. This month, VEVE paid out a total of £50. The third ETF to pay out on the 3rd of October was VWRL, and this one is very much like owning the whole world economy in just one share. Here are the largest companies you would own. In total, there are over 3,600, and the ongoing charge is 0.22%. You may notice that I have a tremendous amount of overlap in my ETFs, but I will probably consolidate these at some point, and I'm okay with it for the time being. The price is up 9.1% and the yield is 1.9% spread over 4 payments a year. This month, VWRL paid out a total of £30. If you want to start investing and also receive a free fractional share worth up to £100, then you can sign up to Trading 212 using the link in the video description. On the 7th, I received a payment from Croda. Times have been very tough for the company for several years, and the shares are down 12% this year. The yield is 3.8% spread over 2 payments. Despite the poor run of fortune, Croda has still been able to raise the dividends. This month, Croda paid out a total of £85. On the 9th, I received a present from GSK. The shares have been having a good year so far and are up more than 20%. GSK is another company which pays dividends 4 times a year. The annual yield is 3.9%. Historical dividends have fluctuated somewhat and are a bit lower in recent years since GSK spun off Haleon as a separate company. This month, GSK paid out a total of £175. If you are finding this video useful, then please hit the like button as it really helps out the channel. On the 16th, I received a bundle of cash from Aviva. The shares are up an incredible 29% this year so far, and the dividends are also very high at 5.6% spread over 2 payments. I've been adding a lot more to Aviva recently. Recent dividend growth is looking impressive too, with payments per share rising for the last 5 years. This month, Aviva paid out a total of £270. Also on the 16th, I received a payment from IG Group. The shares are up almost 9% at the time of this video. The yield is above average at 4.3% spread over 2 payments. Dividend growth has been fairly stable in recent years. IG Group is one of the largest companies in the FTSE 250 index, and I would not be surprised if it entered the FTSE 100 in a not too distant future. This month, IG Group paid out a total of £185. Now, I could of course take all this money and squander it on rubbish, which might give me some short-lived enjoyment, or instead I could buy some long-lasting future independence and freedom by simply reinvesting it back into the stock market. That's how compounding works. In fact, I've put all of the money I've received this month into a new company, which will produce even more dividends for me in the future. More about that a little later on. And now onto the premium bond draw. I only use premium bonds as my emergency fund, kept out of the market on purpose, so hopefully I never need to sell my shares and can allow them to compound over time. The headline prize rate is 3.6%. There is one draw a month. You have easy access to your money, and there is a chance to win £1 million each month, and all winnings are tax-free. The first £1 million winner this October was based in Scotland and held just over £10,000 in bonds. The second lucky winner of the £1 million prize was based in Greater Manchester and held around £34,000 in bonds. So you don't have to hold a maximum of £50,000 to win the big one, but the more you have invested, the greater your chances of winning a prize. In order to win an average of one prize a month, you would currently need to hold £22,000 in bonds. No £1 million for me this month, but I did manage to win 4 prizes totaling £275, my best result so far this year. The bar on the left shows my expected winnings this year so far with 50k invested, and the bar on the right shows what I've actually won. As you can see, I'm a bit behind at the moment, but there is still a couple of months of the year left and we'll see what happens. So the total passive income this month was £1,140, but unfortunately I'm not going to be able to keep all of it because the taxman's claw has arrived and he wants feeding. Fortunately, nearly all my dividends are protected inside a stocks and shares ISA, but I tend to fill this each year and any extra investing must be kept outside in a general investment account. Some of my VEVE and VWRL shares are outside the ISA and I will have to pay tax on some of those dividends at my marginal rate. This means I have to pay £15 this month to the claw. There you go, now on your bike. And there he goes, cycling off into the sunset with my money. I've a feeling he'll be back to torment me again very soon. Now for my passive income summary. The green bars on this graph show my passive income for the first 10 months of last year, and the blue bars are for this year. All figures are after tax, so you can see how much I actually get to keep. This chart shows how my average monthly dividends have changed since I started in 2009. This is just share dividends and does not include premium bond prizes. I find it really motivating to see the average monthly dividends rise over time. At the time of this video, I'm receiving an average of £1,515 per month in share dividends after tax. Before I reveal what I've been buying this month, these are the companies that I own and which will be paying out in November. As you can see here, there are only 4 of them. To be notified when I release that video, then consider subscribing to the channel. The average yield of the FTSE 100 is currently 3.2%. My own portfolio is even lower at 2.9%. But as I've been investing for so long and companies generally raise their dividends over time, my yield on cost is now 6.3%. So what have I been buying this month? Well, I've basically reinvested all of my October dividends into Legal & General. For over 16 years it's been on my watch list, but I've never managed to pull the trigger until now. The share price is up nearly 22% over the last 5 years, but there is that dividend of 8.9%. Normally I would never buy a new company with such a high yield as this, because if the dividend can't be sustained and gets cut, that could really spook investors. Here is the dividend history, and Legal & General has an excellent track record of raising the dividend. So is Legal & General a golden opportunity, or have I made a big mistake? Let me know your thoughts in the comments. Now, in addition to monthly dividends, there is also capital growth of the portfolio. For a breakdown of my complete portfolio and to see how it's performed this year and since I started way back in 2009, then just click here and I'll see you over there. See you next time, and happy investing.